We really appreciate it. I know you've been here several years. Looking back at AI, which has become really almost the forefront of this conference, how has your perspective changed?
Well, I'll tell you what, there's so many opportunities, around artificial intelligence and huge power demand. It's a big, big driver of power demand for us going forward. And we're an all the above energy company, so we're a leader in renewables, leader in battery storage, leader in gas-fired generation and nuclear as well. And so I think we can provide the perfect mix to really helping power artificial intelligence.
When you talk about, though, power and powering artificial intelligence, you also have consumers who want their bills, obviously, to be at a certain price. How do you balance that?
Well, customer always comes first for us. So we own two main businesses. One is Florida Power and Light, which is the nation's largest rate-regulated utility. And we are all about affordability for our customers. And so we have a bill that's 30 to 40% lower than the national average and is only growing at about 2% a year. And we've been able to do that by making really smart investment decisions around generation, and we're very cost conscious. We take that same mindset outside of Florida when we're helping to power data centers. We give them a mix of generation resources that we think are the most cost effective. And one of the things that data center providers are coming to the market with is what we call BYOG, bring your own generation. We help them do that. So what they are doing is they're building their own renewable storage, gas-fired generation, potentially nuclear as well, and they're paying the full bill on that. So customers don't have to shoulder any of the cost. In Florida, we've developed a large load tariff where the hyperscaler pays all the costs associated with the generation and the transmission. None of it gets put on the customer.
So in terms of access to power, you just talked about how you provide it in many different ways. But do you think overall the U.S. is prepared to meet the demand?
I think so. I mean, the industry, is fully behind figuring out how to get power solutions at scale available to the market. And the administration is extremely supportive of this. This administration is fully behind energy dominance and driving energy dominance in the United States, and is really helping to drive permitting and help drive solutions that allow us to bring power generation alternatives to market quickly and affordably.
You recently spoke with investors about a target of 15 to 30 new gigawatts of new power generation capacity by 2035. That's not that far away. Are you still on track?
We are. And one of the things, a couple things. So one, we have a partnership with Google that we're very excited about. We're recommissioning a nuclear power plant with them. We have a joint development agreement with them where we're building out data center hubs. We're also collaborating with them on AI tools for our own company that will take the market to utilities in the U.S. across the globe. And we're working with them on an advanced nuclear collaboration. And then on Friday of this past week, we were awarded 10 gigawatts by the Trump administration to build out a 5 gigawatt facility roughly in Texas and about a 4.5 gigawatt facility in Pennsylvania. It's about $33 billion in investment to help power artificial intelligence facilities in both of those states. So something we're really excited about.
You've also been active in M&A recently, acquiring Symmetry Energy to expand in natural gas to help power that AI demand that you're just talking about. Are you looking to acquire more natural gas companies?
Well, I'll tell you, one of the things that differentiates NextEra is we're in every part of the energy value chain. So not only generation, we're in transmission, we're in distribution, we're in upstream oil and gas, we're also in gas pipelines. Because you have to have an understanding of the entire market, the entire energy complex. And Symmetry was a perfect fit for us. They're one of the largest gas marketers in the United States. That allows us to pinpoint with data and well-informed market information where to best locate new combined cycle facilities that can help, really drive and power AI demand around the country.
So, are you looking at any other M&As?
We're always in the market. We're always in the market looking for things that could add on and could supplement the skill sets that we already have at the company.
During this time of unrest and war with Iran, is raising capital becoming more of a problem with your investors?
No, I mean, we have a very disciplined capital plan. What we've told investors is that we're planning to raise, roughly a couple of $2 billion of equity a year through 2032, where we've given our financial expectations. And, we're investing substantial amounts of capital across the energy complex. As a matter of fact, we're the sixth largest investor of capital in the United States, behind only the top 5 hyperscalers. So nobody's doing more, I think, to really try to change the paradigm in terms of bringing power solutions to customers across this country. And capital is not a concern. Investors believe in our story. They believe in the growth. It's highly visible. We have 12 ways to grow. We have a very diversified company and a very diversified investor base.